Hello everyone, and welcome to your Glassnode video report for week 6, 2024. So what we're looking at today is market momentum. We're going to be looking at this across several different on-chain metrics and really how we can use data to help identify positive trends, negative trends, and importantly, inflection points. When do we get the market starting to shift and the tides start to turn? Now, some of these are going to be on more faster time frames, some of them are on more macro time frames. But really the idea is just to demonstrate how we can use on-chain data to just really spot which way the tide is going and when the tide starts to turn. Now, this is obviously a really powerful idea, this concept of market momentum. When does the market see a lot of positive flows? When are we seeing a lot of strength in the space? And when does that strength start to deteriorate? So we are looking at this from a few different angles, and really you'll see me do this quite a lot in our analysis, trying to look for confluence. When do multiple metrics tell us that we're in a particular regime, and when do some of the faster ones turn around? Often faster metrics, they're a bit noisier, there's more false signals here and there, but they will also be the fastest to respond. And then we've got some longer term metrics which give us the much broader picture. And you can use that as a bit of a higher time frame bias to really understand where we are in the cycle and how things are turning. So we're going to be building up several different tools. And at the end of the day, you'll see this top chart on the right here. We will distill all of these down into a bit of a macro indicator, a bit of a confluence type signal. You may have seen we've done some of these in the past. This is going to fall into a very similar category where we look at different types of on-chain metrics, and we're looking for confluence between a whole bunch of them because that helps us build confidence that we really do have a trend that's in play. So as always, please do give us a rate, a share, and a subscribe. It does help this channel get to more eyes. Do let me know if you have any comments or questions as we go through this. I'm always more than happy to answer those in the comment section below, and let's get stuck into the analysis. Okay, so as I mentioned, I'll start just by having a quick view on what this aggregate confluence model is. This is kind of the end result of the journey we're going to go on today, but I will come back and spend more time with this at the end because this is essentially the final result. But of course, each of the individual components is also very important, and different strategies and different traders and investors will find different ideas throughout this presentation and throughout these different metrics to really understand what's going on. So if you spend much time watching our channel, you'll know that we like to construct these confluence models. The idea is to demonstrate that quite often, and certainly in my experience, quite often many on-chain metrics will align. They'll tell us a similar story. And really the hard part is knowing which metrics to look at, how to process and transform them, and turn them into actionable insight. So what we've got set up here, there's obviously a lot of colors, but let me just quickly break it down. Down the bottom here, we've got 4 different bars. Now, these will all signal. They're basically saying they're on either 1 or a 0. We do have them at different heights just for visual purposes, but for the most part, all of these have a relatively equal weighting. We're looking across different categories. Now, those categories are market or on-chain activity. Is the network alive? Is Bitcoin growing? Is there adoption occurring? Is the market getting more profitable? Do we have more profit in the system, which is obviously a trend of positive or bearish sentiment? Are we seeing spending behavior, right? Because profit taking is a normal part of bull markets, but too much profit taking can create a bear market because it oversaturates demand. So trying to spot that inflection point. And then finally, we have wealth distribution. We know that we have coins that move between these different holders over time. During the bottom of bear markets, we have a very high concentration of the hodler cohort, people who've stuck around for a long time, and they tend to divest at greater rates and lock in more profits, which eventually oversaturates demand towards later stage bulls. So you can also see we've color-coded the price chart. Now what we've basically got is just, again, a very, very simple model. We've got 8 different conditions that form this signal down the bottom here. When we have all 8 of them firing, it means we have extremely positive momentum across many metrics, and you'll get this purple color. When we have more than 50% of them firing, you'll have this light blue. That's telling us we are in a positive regime, but we're not quite full positive across many metrics, and we can obviously break down and find out which ones they are. And then we just have the binary case, or the converse case, which is when we have many metrics signaling negative momentum highlighted in orange. So that's the summary of what we're going to do. We're going to come back to this chart at the end. So stick with me. We'll go through each of the components because what I really want people to take away from this is how we can use different categories of on-chain data how we can process and parse that data to look for momentum. And we use different techniques. Some of them are similar throughout different tools, but we use different techniques to actually parse the data and turn it from a metric into insight and something more actionable. But each of these components will tell its own story. So starting with the on-chain activity, when is the Bitcoin network alive, growing? We're seeing an expansion of its user base. There's lots of volume flowing around. How can we really assess when we have positive momentum on the adoption and activity front? The first one we're going to start with is fee revenue. So what we're looking at here is how much of the essentially fee pressure will go up when block space is constrained, and you're seeing there's a lot of demand for people sending transactions. Now, of course, this has a few dynamics, right? We also have ordinals and inscriptions that are putting some pressure on the fee market as well, but we also just have coins flowing through. And you'll see here, the next one is actually looking at volume. So this is why I like to look at Confluence. You may have full blocks, but are you also seeing lots of volume flowing through the system? So it's important to answer these questions in tandem. Now, what we've applied here in terms of our transformation is a Z-score. This is simply to look for statistical deviations, and we're using a 2-year period. Why do I choose 2 years? Well, when I'm looking for an inflection point, let's say at the end of the 2022 bear market, I want to see when we start seeing positive fee revenue. We see a bit of pressure coming into block space demand, which historically has aligned with periods of network adoption and growth, which also translates to capital inflows. Now, when I use a 2-year period, I'm essentially comparing, let's say where we are at the moment, I'm comparing the 2022 bear market and the 2023 recovery period. I'm looking for an uptick relative to those. I don't particularly care that we have an uptick relative to 2017 or 16, or even back here in 2020. It's a bit too far in the rearview mirror to look for these sharp, fast inflection points. We can, of course, use different periods, and certain people will kind of tailor this or tune it or use multiple Z scores to look for various inflections. But here we're basically looking for, relative to the last 2 years, do we have a meaningful uptick in fee revenue? Now, bear markets, typically we have strong negative, and that remains for periods of time. As we start to get bursts of life, this will flip over and turn positive, right? We can see that the full-scale bull market 2016-17 was an extended period of positive momentum. Early in 2020, following the March 2020 crash, we saw an extended period of positive momentum. And really, since early 2023, we have seen this congestion in the mempool telling us that there is demand for block space. Now, as I mentioned, we also have to pair this with a view on volume, because not all transactions are moving around monetary value. We are seeing inscriptions starting to pick up, which are generally small transactions, a couple of thousand Satoshis or even 100 Satoshis here or there. But there is an economic value that people are associating out externally. So what we're looking at here is only exchange inflows. So this is on-chain deposits into exchanges. Now, the reason we look at this is because this is a real economically meaningful transaction. Coins are flowing into an exchange for one reason or another. Generally speaking, we see upticks. Here we go in 2020. We see a major uptick in our overall transaction volume flowing in and out of exchanges. Quite often, inflows and outflows are very similar in scale. So you can actually do this with outflows. You could also do it with both combined. But here we're just looking at inflows as a proxy for real spot trades. We're seeing that there is an inflow or a demand for people trading Bitcoin. Now, this is a very common transformation that we use for these types of metrics. It works very well for volume or active addresses or anything that isn't a stationary metric. What we're looking at here is a 30-day moving average in red and a 1-year moving average in blue. So the first check we can look at is the 30-day, and that's what we've got down the bottom here in terms of our momentum signal, is the 30-day simply trading above or below the 1 year? Now, more advanced analysts can then look at the degree of the deviation, because that obviously tells us the power of that strength. We can also look at periods when they start to converge and look for divergences in those. But where we are at the moment, we actually have just about an all-time high in on-chain deposits to exchanges. So it's about $7.7 billion flowing in and out of exchanges each day at the moment. This is really looking at it like an economic value. So what we're looking at is coins changing hands, people actually trading, people moving coins from one holder to another, recollateralizing positions, whatever it is. it's economic value. Those coins are changing hands, and we have been in a very, very strong uptrend since October last year. We really tussled around that 1-year moving average for most of 2023, but October really was a burst of very positive performance, and it has aligned with a positive market strength. Price tends to bring people in. Okay, so that's the on-chain activity side. Now, of course, there's many other metrics we can look at. We're just trying to paint a picture. There's many of these different tools, but these are just some choice cuts, so to speak. The next one is to look at how profitable is the market, right? And we're talking about this in the unrealized profit regime. So these are the coins that are held by investors. Obviously, during bull markets, existing holders get more profitable. As the market rises, their cost basis gets lower and lower relative to the current spot price. And also the amount of coins they hold that are in profit increases. The converse is true in bear markets. So what we're looking at here is the amount of coins in profit, just literally measuring is price above the cost basis for how many BTC. Now, what we've done here, we've got an oscillator. This blue curve here is a 30-day net position change. So essentially, as this orange line climbs, this is the number of coins in profit. We've applied a 90-day moving average just to get a really nice smooth curve to look for these big picture inflection points. Are we seeing more coins going into profit, positive values over the last 30 days? If we're seeing coins going into loss, that would essentially be a negative. That means that coins are losing their profitable state. Now, this tool is really powerful because you can actually see we flipped from positive to negative right as we came into the first rounded top in 2021. This is showing that lots of coins that previously had a cost basis at a much lower level were being sold to new buyers at higher prices. And even though the market went from 40 to 50 to 60 to 64, the amount of coins in profit was actually decreasing. So we actually had a negative reading telling us there's a lot of distribution at play. Very negative values can also give us the inverse reading. We start to see this kind of flip over where as the market starts to rally, coins that were sold at the lows are then purchased by somebody else and they move back into a profit. So we're really looking for this transition. You can actually see here very early in January, before we even had our rally, all of the coins sold at the FTX lows, price just ticked 1 cent above their cost basis, and over a 30-day period, we saw positive momentum trigger and the market moved accordingly. So we're really looking for these concentrations of cost bases, and when over the last 30-day period, this is actually starting to shift and change. So very powerful, looking for divergences, looking for trend. And as you can see here, we are in a net positive trend, and we've essentially had our second leg up for this market cycle. So that's telling us there's a large cluster of coins accumulated at the FTX lows. There was another large cluster accumulated here during that 2023 consolidation, and we've since put most of those back into profit. Now, that metric was largely measuring the amount of coins, right? The volume of coins in profit or loss. In a binary, it's either in or it's out of profit. We can also look at the USD value that is in profit, right? Measuring the amount of unrealized gains, the paper gains or the paper losses. Now, in our previous report on mastering MVRV, we covered this from the MVRV perspective. When we developed our coin time economics framework, which you'll find in a link in the description below, we actually developed what I believe is a superior measure of the active cost basis, so that the cost basis, not of every coin, but only of active investors. And this is called the AVIV ratio. And what this is, it's a much, much better metric for tracking where is the majority of people. We're discounting all of Satoshi's coins. We're removing all of the lost miner coins. We're really focusing on the active investor cohort. And with this model, this is a much longer term. You'll see that we go through very long periods of positive and then negative and then positive momentum. This is a much longer term, so a slower indicator relative to the other ones, but a lot more useful for just kind of establishing what the weather patterns are at this point in time. Now, what we're doing is plotting the AVIV ratio, or MVRV, if you want to use that, relative to its 1-year moving average. And in a very similar way, note that AVIV goes through this long scale upwards trend, and then it drops dramatically. When the bear market starts, it slices through the 1-year moving average and takes out many of the lows. Same here in 2021. We had this big bearish divergence and then a massive slice through the 1 year. This is showing that even though price is very high, the amount of profit in the system is decreasing significantly because lots of coins went from a cost basis of 6,000, 8,000, 10,000 to 60,000, 50,000, a very sensitive, price sensitive cohort with a very high cost basis. Likewise, when we get down near market lows, here's again the FTX period, we see a very rapid slice back up above its 1-year moving average because all of those coins that were capitulated at the bottom, and you've got this big supply cluster down there, have transitioned into, right back into profit at a significant rate. So you get this acceleration of profit, and we then break up above the 1-year moving average. So we've essentially been in positive momentum since about February last year and have essentially held it ever since. So again, another indicator telling us we're in positive momentum. Now, we can also look at this from the short-term holder perspective. This is this hot ball of money, let's call it, that follows price around. It's measuring only coins acquired in the last 155 days. Now, I mentioned before that some of these metrics are going to be much, much faster. And as a result, you're going to have a lot more noise in the signal, but it's also going to be the first one to respond. So we see our slice down below the 1-year moving average on the short-term MVRV here in 2017 and again in 2021, basically as we came off the all-time high. So the AVIV is going to be a little bit slower or a bit further into the bearish trend by the time this one triggers, whereas short-term holder MVRV will be very responsive. We essentially flipped over its 1-year moving average as we came off that $64,000 peak when Coinbase had their direct listing. Right? I think we were trading somewhere about 14,000, just coming off the 20,000 all-time high when it flipped over. Now, it's important to note that we do have these retests throughout. So again, during that market uptrend, we can essentially use the AVIV to calibrate. Are we in a bull market, long-term, high time frame? And as a result, how do we read those signals on the more active and faster short-term MVRV? So these things often work hand in hand and really help us understand the mechanics of what's going on in a combined picture, right? No analysis is complete with one single metric. It's about just understanding what is the big picture doing and then zooming in depending on what your particular preference is. Okay, so moving on to our third category, and previously we were looking at the unrealized profit and loss. Now, for reference, unrealized profit and loss metrics tend to be a lot slower because they're showing you the existing, 88% of coins held off exchanges. What are those investors? What's their current position? Think about unrealized profit and loss as the incentive. When someone's in a lot of profit or in a lot of loss, the probability they're going to do something increases. But probably the more important question, and quite often something that really does move markets around a lot more kind of fast paced, is did they actually do anything about that? So on any particular day, about 5% of the circulating supply transacts. Now, some of those are obviously coins that get spent multiple times, but each of those coins that's spent has a signature. What was the profit that it locked in? What was the cost basis that it came from? How long was it held for? So when we move into the realized category, the spending, the volume side of the equation, we're looking at a much smaller proportion of coins, but these are the ones that actually took action. And quite often, these are the ones that create the change in markets. It's a change to the unrealized profit or loss state. So the first one we're looking at is SOPR. So SOPR is a very popular metric. It's actually the sibling to MVRV. SOPR is the spent version of MVRV. MVRV is the unrealized profit or loss. SOPR is the realized profit or loss, how much was actually locked in. And again, we're using a very, very similar 30-day moving average, right? Relative to the 1 year. Just looking at periods when profitability declines, and you can see here, SOPR again is quite responsive. We get a crossover right before the nasty sell-off here in May 2021, and we never actually really recovered that positive momentum from the all-time high. So it gave us a bit of a signal and then said, nope, actually, it's negative momentum all the way through until January 2023. So it's telling us, when does profitability of the people who are spending? This is deep panic when you've got very negative or SOPR values below its 1 year moving average, and profit, right? That some of that optimism and profit taking and capital inflows and these things that really signify that the market is in a more positive space. So again, we are in a regime of positive momentum. We found one retest of that 1 year moving average. It's coming back and looks like it wants to do it again. Remember that SOPR pulling back is telling us that the amount of profit taking is slowing. During uptrends, quite often this will form a degree of support. If, on the other hand, it doesn't form support and really breaks through, it again tells us a story that there just isn't enough inflowing demand to soak up that profit taking. Okay, now this one is probably one of the more complex metrics in this suite. In the background, it's using all of the same concepts that we just explored. Now, in particular, what we're looking at here is the profit realized, so realized profit to loss ratio. So why do I like to use profit and loss ratios? Because when you're looking at things in a ratio, let's imagine we're in a raging bull market, right? In a full scale bull market, it's very, very hard to lock in a loss. Unless you buy the local top and then you sell the local bottom, that's generally the only way you can lock in a loss. Most people are in profit. Most of the coins moving around are taking chips off the table. So what that means is that if you take a profit to loss ratio, your numerator, the amount of profit, is very large, and your denominator, the amount of loss, is very small. But what happens when you have a lot of coins that get concentrated at the top? All those profits get taken, and lots of brand new investors who are slightly less experienced, they buy the top, and suddenly lots of people go, well, you go from not much loss to a bit of loss to a lot of loss. That's an exponential change. It's kind of like going from a very small percentage, right? Going from 0.1% to 0.2%. It's small in absolute magnitude, but it's a doubling in terms of relative scale. So what we've done here in the green, we're modeling how much profit to loss relative to its 1 year moving average. And in the red, we're measuring how much loss to profit relative to its 1 year moving average. So the best way to think about this, when do we get these exponential shifts from there's not much loss to there's some loss? But on a relative term, that's from nothing to something. That's an exponential shift, right? That's a doubling or a tripling of the amount that previously was. So this metric is going to be very, very powerful at spotting those inflection points. And we've got a little black trace down the bottom here, which is basically modeling how much of the market is profit or loss, kind of a bit of a signal within a signal. But this thing here is going to be really responsive at looking for inflection points. Again, near the Coinbase direct listing, $64,000, we actually flipped over to negative because lots of people bought the top. Basically, everyone was in profit, and then suddenly a lot of people were in loss. And you get this flipping over, and suddenly the market is a lot more sensitive to any kind of downdraft. If we go here again to 2021, before we even had our January short squeeze, this metric was flipping from negative sentiment over to positive sentiment, telling us lots of coins that were sold at the bottom now have a new cost basis, and that tiny little move up in price puts them all back in profit in an exponential manner. So you get this flipping over back into positive sentiment. And for the most part, all of 2023, with the exception of the August sell-off, right, which actually flipped over right before. So you can see that we actually had a flip over as we sold down, but we moved back into positive momentum before our October rally, telling us that we still had that net positive momentum throughout the market. Now, the last one we're going to talk about is the wealth transfer. So this is kind of this long-term view of old hands that distribute their coins to new buyers. At some point at the bottom of a bear market, you have a maximum saturation of these older hands, high conviction, the hodler cohort. At the peak of bull markets, you have the opposite. You have lots of people who saw Bitcoin on the news, their friend told them they're getting rich, and lots of people who are just somewhat less experienced are coming in and buying those coins off the older hands who are actually distributing their wealth. So the SLRV ribbons is really trying to model this. And this is a model that was originally developed by Capriol Investments. And we're using essentially the construction that was put forward in that paper. What this is looking at is this balance of coins, right? How many coins are held by 24-hour-old coins relative to 6 months to 1 year? It's kind of this balance between, new, hot and cold, new and old. And very high values tell us that there's lots of new buyers. A very large proportion of the supply is held by these hot supply, people who've recently transacted, they've bought their first Bitcoin. Very low values is telling us that there's basically none of those people left, and it's only the hodlers that remain. And we're using a very simple 30-day and 155-day crossover. And this one here is particularly good at spotting, again, these inflection points. FTX, we flagged and moved over into a positive regime. And right before that August sell-off, we actually had a warning signal that there was perhaps too many hot coins relative to the older supply. So you can start to look for these like more macro, but also more micro trading signals, right? You can look at these things through a few different lenses, but this is looking at that balance of wealth. How many coins are held by these different cohorts? When do we get flip over from very, very bullish and lots of people coming in and excitement to we actually might have a saturation of inexperienced buyers, and that creates a degree of panic within the market. So as I said, we'll come back and close out with our summary, right? Just to get a bit of a view on where we are at the moment. So they're basically the 8 metrics that we consider. Of course, different investors and different analysts can change and look at different Z scores. Maybe you'll use a different moving average, different period. The idea is just to help outline some of the ways that we're looking at the data, give some ideas to really explore. There will be different transformations and different checks that people can look at. But we can see that we moved into a regime of net positive momentum following an extended period. And you can see here, actually, for those who've been following this channel for a long time, you know that I consider the April 2021, when Coinbase went direct listing, as the true all-time high. Even though we hit a higher price, we never quite got that positive momentum. I think you can actually see here that this is why. With exception of a very, very brief period where it could have, would have, should have, but didn't actually move into positive regime, we've essentially been in negative territory all the way through to January 2023. We then had more than 50% of our metrics move into positive. And you can see there was a couple of bursts here where we got all 8 of them firing. But for the most part, we've been in a period of positive momentum since October. All of them have been firing off, telling us that we actually do now have a fairly sustained and robust period of positive momentum. Now, we can, of course, look for periods of time. 2019 was quite choppy. We had a period where we went into positive territory. We then had a bit of chop heading into March 2020, where it was a bit negative. But following that event, market momentum really picked up and it stuck all the way through until that May sell-off. So where we are at the moment, we are in a period of net positive. Just about all of our metrics are currently saying that there is positive momentum in the space. But of course, we keep an eye out for when these inflection points, when do things soften out? When do we start getting them transitioning? And of course, going through each of those individual metrics can be really, really useful to help understand if we do see a deterioration in the signal, which of these metrics is actually starting to fall off. If, for example, it's the fee revenue, maybe that's not quite the heaviest weighting in your model. It may be that you prefer to look at things like realized profit, unrealized profit and loss, or supply and profit. Or it may be that we do in fact have some of those more sensitive metrics, short-term MVRV, or maybe it's actually the realized profit loss ratio momentum. Some of these things which are probably quite high signal, telling you there's a lot of trapped investors that bought just a little bit too high. If some of those start to trigger, that may have a greater weighting. So this one here is equal weighted, but it may be that different people and different analysts will use these at different weights. So that's kind of a bit of an overview. As I said, there's a lot of information in there, but you'll see that the mechanics we're describing, generally speaking, are fairly consistent. Is the network growing and alive? Do we have the market getting into a more profitable or a less profitable state? Are profits being taken and perhaps starting to oversaturate that demand? You've got a few trapped buyers. And do we have a healthy balance of, capital held by the hodlers versus the new buyers? And when you put all of these together, you're getting a pretty clear picture on what's going on within the market. So thanks for tuning in for that session, folks. Hopefully you found that useful. You will find this particular dashboard live in our signals section of the dashboards part of the report. Of our dashboards product. And there is a report that will be associated with this, breaking down each of those individual metrics and just understanding what the different conditions that we look at are. Hopefully this is a good exercise in how we use transformation, right? Sometimes we use 30-day versus the 1 year. Sometimes we use Z scores. There's various other tools that we use, but we're really looking for those inflection points and when does it remain within that positive or negative trend. So as always, let me know if you have any questions and I will see you in the next one. Cheers.